Hello, everyone, and welcome to this new episode of Bitcoin, Fiat, and Rock and Roll. This episode will be in English, and before we start, I would like to thank our sponsors, which is first Relay. Relay is our preferred partner for buying Bitcoin, and the reason for this is that Relay is very beginner-friendly. You can buy Bitcoin without registration and without a prior deposit. You can also do a savings plan there, and you get your Bitcoin into a non-custodial wallet. And if you also want to buy Bitcoin with Relay, follow the link in the show notes, or you can also use the referral code ROCK, R-O-C-K. This allows you to reduce your transaction fees by 0.5%, and at the same time, you can support Bitcoin, Fiat, and Rock and Roll. Our second partner for today is Coinpanion. Coinpanion is a crypto broker from Vienna that enables you to invest into the world of cryptocurrencies, NFTs, and the metaverse. Compared to other crypto brokers, Coinpanion supports you with doing market research by analyzing thousands of cryptocurrencies, NFTs, and metaverse trends. And based on that, they build smart portfolios that allow you then to invest intelligently. For instance, their new NFT and metaverse portfolio. And for all listeners of Bitcoin, Fiat, and Rock and Roll, there is a €20 sign-up bonus. So simply use the promo code ROCK20, so ROCK20, so 20, the numbers 2 and 0, ROCK20, in order to get your bonus. Thanks again to our partners for today, and now enjoy the interview with Dante Disparte from Circle. Hello and welcome to a new episode of Bitcoin, Fiat, and Rock and Roll. As you can hear, today's episode will be in English, and as you know, we only do this if we have super special guests. And today's guest is without doubt super special. I'm very pleased to welcome Dante Disparte. Dante is Chief Strategy Officer and Head of Global Policy for Circle. And as many of you know, Circle is the company behind the USDC stablecoin. Prior to joining Circle, Dante has served as a founding executive of the Diem Association, and there he was responsible, among other things, for public policy and communications. Dante has a long history as an entrepreneur, a business leader, and a global risk expert, and it would take way too long to mention everything Dante has done during his professional career. So allow me to take a shortcut and simply welcome you, Dante, to this podcast. It is a real pleasure to have you on.
Vielen Dank, Alex, and guten Tag to all your listeners. I'm ashamed that we will do this in English because I'm presuming German is not one of the languages I speak, but it is great to be with you, and in some respects, maybe a bit of a triumphant return to Switzerland, or at least to Swiss audiences, given all the work I've done before with Libra, and obviously continuing to follow developments around the world.
Absolutely. So Dante, my first question is actually, how many Dantes are there? So when visiting your website and counting the affiliations you're engaged in and the books and articles you're writing and the speeches you're giving, I thought there must be at least 3 or 4 twins or clones of you in order to make that possible to create such a huge amount of output. So tell us your secret.
Well, look, if it's a blockchain conversation, then there can only be one, right? That's the power. The power of immutability is that there is no imposter. There's no artificial token out there. Although I did have to take down someone who was impersonating me on Twitter not long ago.
But that means you're important. If that happens, it means you're important. Yeah.
Well, I suspect imitation is the sincerest form of flattery. So that did remind me that perhaps there is a level of attention now being paid. There's only one me. Happy to be with you, Alex, and happy to dive deep into I think a range of topics that I know we have on the agenda for today's conversation.
Yeah. So, and even though you do a lot of things, my impression was that one constant theme in your life seems to be the topic of risk. It comes up over and over again. So I was wondering where that interest or that fascination, maybe even for risk, comes from.
Yeah, well, indeed, risk, if you ask me, more so than anything, more so than being a crypto utopian, I'm definitely a risk and resilience person. And I spent a good portion of my career in the insurance and risk management industry. And when you ask the question, who pays when a disaster strikes or who pays when a system fails, you really start to get deeper into not only economic interest, but you start to get deeper into how systems work. And so my original foray into the blockchain and crypto assets market was actually in the context of risks. So I started an insurance business called Risk Cooperative in 2014. And a lot of the very early crypto companies were coming to us seeking legitimization, right? To get the seal of approval of an insurance underwriter, whether it's Lloyd's or Swiss Re or Munich Re or whatever the case may be, is to have transmissioned from one balance sheet to another in economic risk. And what I learned then was that if I could understand early crypto companies at that stage and provide cyber insurance, management liability, business continuity, a host of complex risks, then if the industry was underwritable and insurable, then the industry was legitimate. And I think still till today, there are many, many, many crypto projects that would fail a basic test of insurability and therefore are likely to fail a basic test of being well regulated and trusted by the market and consumers. So that was my original journey down the rabbit hole.
Yeah, and I think there are probably 1,000 ways that, or 1,000 entrances into the crypto world, and risk is definitely one of those. But I haven't met a lot of people who actually entered the crypto space through the risk entrance, even though it's an extremely important one, of course.
Well, the next step, Alex, was Einstein said, if you, and I paraphrase, you do not know a subject well enough unless you could describe it briefly. So the first step was to try to underwrite and insure the emerging crypto assets industry. The second step was I started writing a lot about what was going on. And so at peak, I wrote maybe 5 to 7 articles a month in Forbes about what was going on in the crypto assets industry. And it was fun writing, whether I had an audience of one or there were thousands of readers of articles. The paper and the pen were a place where I could have an intellectual debate, perhaps mostly with myself, but a debate about what was happening. There was the initial coin offering bubble. There were all kinds of scams. There was the failure of the exchange in Canada, Quadriga CX. And a lot of it looks exactly the same, like a lot of the same things we're now dealing with, except instead of talking about initial coin offerings, we might be talking about non-fungible tokens and all kinds of stable coins masquerading as stable instruments and so on. So history does not repeat itself, but it rhymes. And there's a lot of things that are happening today in this crypto market that look familiar.
So Dante, this podcast started out actually almost at the same time as the first Libra white paper has been published, and it had a huge focus on Libra, later called Diem, over the first, I would say, weeks or even months of the podcast. I don't want to spend too much time on Libra or Diem today. I much rather talk with you about Circle and USDC. However, I still assume Diem has been an important part of your life over the last years. So I just wanted to know what made you engage in this Diem project, and now looking back, what was maybe your 1 or 2 main learnings that you took away from these roughly 2 years, I believe, at the Diem Association?
Yeah, absolutely. Well, first of all, thank you for the question. I only remember the journey fondly, and my personal risk calculus for joining the Libra project, because I joined very early before the association was formed, but I joined with no prior link to Facebook or any of the founding companies. I was a humble insurance entrepreneur connected to think tanks, writing articles in Forbes about crypto and blockchain. And so serendipity found me. And then I ultimately made a personal calculus that risk, that effectively this was it. Win, lose, or draw, the Libra project would change the world. And so when offered a seat on a rocket ship, I guess is the simplest analogy, take any seat you could get. Although I must say, there was a period of time where I actually felt like I might have been a Swiss ambassador during that journey, because the project created, more than any other effort since, the deepest global response, good and bad and in between, around the future of money and payments. But also, one of the things I had to defend was the sufficiency of Swiss oversight over an innovation like this. And there were many that argued, you're going to Switzerland, it's a regulatory haven. And I argued in the inverse. I said Switzerland is a jurisdiction that has oversight over many global systemic financial institutions and had, I think, frankly, a deep approach with the regulatory colleges and other efforts for Libra that are a paradigm for big innovation in financial services. So I would have done it all over again. Now, coming to Circle, it's the ability to move from an aspirational project to an operational one. And so in my personal opinion, it's much of the same mission. But today I have a $50 billion digital currency in circulation, powering economic activity on 8 public blockchains. And then through the course of the COVID-19 pandemic, Alex, the future of money on the internet, I think, is just a painful operating reality that we need these innovations at scale. And luckily, Circle's here.
So perfect. Then let's maybe dive into the topic of stablecoins and the USDC, of course. So Manuel, one of my co-hosts, has done an episode a couple of weeks ago where he provided an overview of the different types of stablecoins. So I will put a link to this episode in the show notes for every one of you out there who is interested in that. Manuel there explains the difference between asset-backed, crypto-backed, and algorithmic stablecoins. So no need to kind of start at zero here. But still, maybe Dante, maybe you could kind of allocate USDC in that stablecoin universe. So what are kind of the main characteristics of USDC?
Yeah. And if for your show notes, if you don't mind, if I could put a small plug, because I have sat through literally every hearing, every meeting, public or private, about stablecoins and what well-regulated stablecoins look like since 2019. And so I summarized all of those learnings in a paper looking at the 10 most common misconceptions about stablecoins. So I'll share that with you, Alex, because I think your listeners will hopefully take something from it.
So Dante, I have already reserved like 10 to 15 spots in the show notes for you, because I know you've written a lot. So just give me the hints, and I will then plug in the links.
No, great. But this one hopefully answers the core question. Not all stablecoins are created equal, point one. And if you want to be a well-regulated stablecoin, you actually have to go to really, really great lengths in the show me the money category of issues, right? Now, the other reason global regulators and policymakers are paying attention to stablecoins, it's not because they have nothing else to do, or they're not preoccupied with economic recovery and COVID-19 and regulating their financial system. It's because the stablecoin, more so than any other crypto innovation, has the highest likelihood of being used by hundreds of millions or billions of people. And so I think that's an important point. There's also then some basic emerging standards of what a good stablecoin looks like. Number one, you have to be able to meet the fundamental promise in your name, stable coin. And if you look at the biggest of the stablecoins in circulation, and you look at the new variations of stablecoins emerging, like algorithmic stablecoins, it begs some fundamental questions. If it's complicated to explain what your underlying reference asset is and how it behaves, then it's very likely you're going to introduce economic instability to something that is promising the end user financial stability and solving the original sin of crypto assets, which is buyers and spenders remorse and hypervolatility. USDC promises to be a dollar, quote unquote, uploaded on the internet. Therefore, what underlies USDC are cash and US treasuries, short duration US treasuries. I think you should see a world in which regulators understand that fully, banking regulators understand it, and then now you start solving for the risk that the stablecoin breaks the buck, or that there's a loss of confidence or a death spiral. But that should be job one of any responsible stablecoin issuer, is actually introduce economic stability so that people have no buyers and spenders remorse, and we're not celebrating Bitcoin Pizza Day because you spent a stable coin that changes overnight.
Fully agree. And I think that becomes particularly important if this vision, which you and many other stablecoin issuers have in mind, comes true, namely that the stablecoins are actually used as a proper alternative to the account-based US dollar. And if we really believe that kind of our financial system is at least partially built on stablecoins, of course, that has to be number one, that we are not kind of introducing a new risk angle into our financial system by using a form of money that is not 100% stable.
Well, that's right. And then to that end, Alex, there's actually a couple of rhetorical questions that I don't want to say mastered, but that I continue improving upon based on the fact that public authorities ask very hard questions of crypto, but crypto should ask very hard questions of public authorities. For example, is it really your money if you have to pay someone to hold it for you, and if you have to ask someone for permission to spend it? And so the idea of device-centric money and assets and the ability for you and I as users of these financial services to control how we send, spend, save, and secure money, this is a very powerful democratizing wave of finance that I think is a necessity today. The alternatives are terrible. The other interesting alternative in terms of a rhetorical question of public authorities is most people on the planet are subject to domestic hyperinflationary currencies. In the extreme, public money may not be worth the paper it is printed on if you live in Zimbabwe or you live in Venezuela. And so these alternatives are not substituting public money. They're just creating alternatives that provide for user-controlled money, payments, banking, and assets.
So USDC, you mentioned it, or you named it money on the internet, or maybe money on the blockchain. What are the main use cases of USDC today?
Yeah, well, what's amazing is, years ago, I was stranded at an airport in California, well before Libra, well before even Circle produced USDC. And I wrote an outline for a book called Money in Motion. I haven't yet written the book, obviously, because I went from writing about this stuff in the abstract to being on the front lines. But maybe one day I'll write the book. And so the way of thinking of what is the use case of USDC, because of the fact that USDC is a trusted dollar on the internet, but USDC is also building for network effects and competition and interoperability. We should have a discussion about that. Then the answer is, well, what is the use case for a dollar? And we're literally seeing all of it. We're seeing internet native capital markets, AKA DeFi. The bootstrap use case for the stable coins in circulation has been to power some of the most exacting, demanding market segments ever, always on internet native, zero bank holidays, capital markets activities. USDC has powered that revolution. Then you're starting to see green shoots, but still growth across the realm of real world payments. Companies like MoneyGram on the Stellar blockchain are creating USDC powered remittance corridors. Companies like Stripe very recently this past week announced a project with Twitter to enable USDC micropayments effectively on the Twitter platform. This is amazing because it's real. And what's amazing about it is that USDC increasingly is that open dollar standard built across multiple public blockchains. The debate now should, in my mind, move away from what is the minimum operating requirement to be a well-regulated stablecoin to how do we continue protecting and defending open innovation in open financial infrastructure. Non-proprietary technology, to me, matters much more than the reliance, the trust, and the transparency of the digital asset. We have to start really, as a Western corporate strategy and Western national strategy, protecting the underlying internet of value, I think is a really important debate.
Yeah. And these are super interesting developments, in particular the partnership with Stripe. So congratulations again on that. I think that's a super exciting thing, in particular, since for me, it's the first time that actually classical stablecoins, let's call it like this, are moving closer and closer to use cases around merchants and e-commerce and maybe even point of sale kind of payments. Until now, my impression is that actually the big stable coins are not really used for that kind of use cases. I mean, when I look to the US, you have, of course, a huge potential in this direction. So what do you think? What's the reason why we are not yet using stable coins for these kinds of use cases?
Yeah. No. First of all, Alex, you totally get it. And this is why I'm glad I'm on your broadcast, right? First of all, it's interesting to note that no other stablecoin is making that breakthrough, making the magic leap from blockchain native, internet native, crypto native to mainstream. USDC, by today's standards, is the only one that could cross that magic chasm into real world payments and merchant acceptance. WorldPay by FIS, one of the world's largest merchant acceptance companies, recently announced the use of USDC as a settlement layer natively. Visa, MasterCard equally are in this same trend, and USDC is the stablecoin of reference. And so then the question is, when was the last time you and I had a conversation or went to a conference about the hardware and software that makes the internet work? When you go to internet technology conferences, you talk about outcomes. And my estimation is that when the technology fades to the background and high-performing third-generation blockchains are merely a part of the global settlement system for always-on financial services, we will not have a conversation about stablecoin or blockchains or proof of stake and proof of work and the magic, but rather we will talk about fast, instant settlements. And I think that trend is happening very, very fast. And the big institutional players, whether they're providing capital services or they're using USDC as a part of their settlement infrastructure, it's basically parallel alternative settlement systems that are not competing with the traditional financial system, Alex, but perhaps completing a lot of work they're not finishing.
So to what extent are you at Circle thinking and brainstorming and maybe even doing business development on the use cases itself? So are you just saying, leaning back and say, we are issuing the token, we issue it on various blockchains, and you guys out there, you do great stuff with it? Is this your position, or is it rather you are engaging also with the community, brainstorming, thinking about business use cases and business development?
That is such a great question. So if I had to give you the answer, I would say we're in this era of composable, programmable, exquisite internet money. And then if you believe that that is the direction of travel, and Circle's mousetrap or killer app is a trusted dollar on the internet, then we also want to be a deep, deep catalyst to a developer-first, innovator-first operating model. That the power of selecting non-proprietary technology, code equals blockchain, public blockchains, means that Circle wants to ensure that any user who builds on USDC is able to have fundamental economic trust in USDC, broad merchant acceptance, none of the walled gardens that you see in traditional payments, and that they can start building the programmability, the composability, and the use cases where Circle is providing that wholesale service of issuing a trusted stablecoin. So you hit the nail on the head. In fact, for your listeners, we've just announced the dates for our big ecosystem conference in San Francisco in September called Circle Converge. And the idea that you take this ecosystem first approach to money that otherwise is anti-competitive, monopolistic, or duopolistic and favors incumbents. We want to be a responsible challenger and also promote well understood responsible financial services innovation. So we're taking the ecosystem bet.
So given all of what you've just said, I mean, it's probably the listeners can probably answer the next question on their own, but I'm still asking this to you. To what extent do you think USDC is a competitor to either Bitcoin or a US central bank digital currency?
Yeah, well, look, first of all, I love these questions because the answers are getting even clearer in my mind, right? Crypto is an industry that continues to suffer from a bit of a brand problem and an explanation problem. The good news is I think more and more people are starting to understand it, and 200 million plus people around the world have taken the long bet. But the long bet is not that any of these assets, including USDC, is substitutional to the dollar or substitutional to alternative assets. Instead, I think of our industry broadly as additive to traditional finance, banking, and assets. And so in that respect, USDC doesn't substitute to the dollar nor compete with the dollar. If anything, we literally import US monetary policy. We import all of the kind of dynamics that underpin the dollar, and we're just giving it the superpowers of the internet. And my simplest analogy, maybe your audience might be a little too young, but I will date myself. My simplest analogy is, remember when you took a CD and you could turn it to an MP3 for the first time? You still had your CD, but the MP3 suddenly gave your music the ability to pause, advance, skip, etc. And that's exactly what a really well-regulated stablecoin like USDC is all about. Now, is it substitutional to a central bank digital currency? To be very, very frank with your listeners, a central bank digital currency is a solution looking for a problem. And in my humble opinion, it's an anti-Western approach to public sector innovation. It would be like an aviation safety authority building jet engines and flying planes. I think that's anti-Western, and the West benefits from free market rules-based competition. And that's exactly what Circle is doing.
Do you think there is a good, or is your impression that there is a good understanding among regulators and also central bankers? Because I very much agree with what you've just said about what USDC does in the end. It's bringing the US dollar to the internet. It's kind of extending the possible realm where the US dollar can be used. It's enabling new use cases for the US dollar, but it's still the US dollar. It's not kind of a new form of currency. Do you think this is well understood among regulators and central bankers? Because my impression around Libra and Diem was that this is actually not the case, that they are very afraid of something that might not even be a problem in the end.
Well, there too, there may have been a little bit of a branding challenge, because the first white paper had a tagline that said reinventing money. And I tell you, Alex, if you or anybody listening wants to be summoned by every central bank on the planet, produce a paper that describes how you're reinventing money, and then do it with a consortium large enough to actually pull it off. However, having said that, I do think that, for example, the United Kingdom and its parliament had a public consultation about the merits of a central bank digital currency in the UK. I answered that consultation. I didn't hold back necessarily, and wrote a number of the reasons why I think it's not a great idea. And the simplest way to describe it is that central bank digital currencies predate Libra, but when Libra was announced, you look at the sentiment of speeches and the sentiment amongst policymakers, and the idea was a CBDC would be the world's best way of keeping big tech in check, or competition with China. And so we now live in a world where there's a much more open, dynamic middle zone of competition that is rules-based in digital assets and stablecoins. And it begs the question, what would a CBDC do in a Western society that satisfies standards around trust, transparency, the risk of having people deplatformed from money, and then ultimately the central bank has to make a 100-year technology bet? I'm willing to wager an open, competitive, rules-based free market will get a better long-range choice than a 100-year public sector technology bet. So in many respects, CBDCs are masquerading real-time payments innovations amongst central banks, which are totally fine, but they will only benefit the wholesale banking system as opposed to retail consumers. And lastly, they will be domestic innovations, whereas stablecoins today are global in scope, and they're flowing through that kind of ecosystem that I described before.
Stablecoins being global is actually a good comment to move on to actually diving a bit deeper into what Circle plans and what you have in mind. A couple of weeks ago, you announced that Circle has raised $400 million in funding, amongst others from BlackRock, I believe, and Fidelity. So first, congratulations on that. My question would be, what's next with Circle? So what do you plan to use the money for? And is one thing maybe you have in mind to extend your offering globally?
Yeah, well, so the thank you for that, and indeed we really heartened by what the investment represents, not only as a bet in our company, but ultimately as you could start to have the intuition that the long range goal is, particularly with an investment from BlackRock, is that this type of financial markets infrastructure and dollar digital currencies like USDC can start to tap multi-trillion sort of economic activity in the so-called real world, right? That bridge between internet native digital assets and crypto assets and real world utility, we're only in the early innings of what this looks like, right? And so I think a lot of major institutional players, merchant acceptance networks, the Stripe announcement with Twitter, the World Pay announcement, and then ultimately this kind of capital commitment into Circle starts to indicate that we should think of our business and we should think of the use of public blockchain infrastructure as really critical, always on, non-proprietary financial markets infrastructure. In that spirit, the addressable market is enormous. Cross-border trade, commercial transactions that are literally stranded in the 1700s. Earlier in my wavy roller coaster career, I used to be the managing director for Land Rover operations in 32 emerging and developing countries. And I always looked back and said, I was not an automotive distribution business. I was a counterparty risk management firm that also sold cars. And so the way you think of commercial trade, bank guarantees and letters of credit, all of that institutional use of public blockchain infrastructure needs a stablecoin, but it also needs institutional adoption. And so we think Circle, probably more so than any company in the industry, is one of the core drivers of that mainstream institutional adoption, while keeping our core tenets around being blockchain native, crypto native, and believing very deeply in this idea of open innovation on these networks.
So since the audience of this podcast is mainly a European audience, maybe let's quickly take a look at Europe. There is not really any big Euro stablecoin available at the moment. So 2 questions for you. Maybe the first one, does Circle has ambitions to offer stablecoins in other currencies than the US dollar? Maybe question 1. And question 2, why do you think there is no big Euro stablecoin at the moment?
Yeah. So to question 1 of a multi-currency environment supported by Circle and issued under really, really clear standards of trust, transparency, accountability, interoperability, the short answer is yes, right? Circle as a company has an ambition to, continue building this financial market infrastructure, and to do so in an environment that supports the native use case. This may include the euro, this may include other currencies, but we gain nothing if we're doing it in competition with public oversight and authorities. I've learned the hard way that moving fast and breaking things works with a lot of categories, but with money, perhaps you ought to have a bit more respect for what those boundaries look like. So yes, the short answer is you could expect a multi-currency future supported by Circle, but supported in a manner consistent with rules, consistent with trust, and to do with other currencies what we've done with USDC. Now, the question on, is Europe reconciled to being a flyover region of the world, or will Europe be a center of gravity for financial services innovation? And I think Europe has done more than any other jurisdiction on the planet with the markets and crypto assets framework, 600 plus pages of rulemaking and laws to comprehensively understand what happens with these innovations. Now, originally, MiCA was produced in response to big tech innovation and the quote unquote digital barbarians at the gate. But in there are some really good concepts. Number 1, the reconciliation of stablecoins with pre-existing electronic money rules, e-money rules. Mm-hmm. Number 2, the opportunity to passport these innovations across the EU. It's a very powerful concept that could potentially abstract away regulatory complexity one country at a time. Number 3, the notion that reserve assets should be in a similar form and in a similar function as the regulated banking sector. So all of these are doable, and then people should have the presumption of privacy and so on. All of these are doable. But then there's some macro reasons why there isn't today a major euro-denominated stablecoin. 1, issuing a stablecoin is hard. 2, doing it well is hard. And 3, the macro environment with negative interest rates begs serious questions about the economic model of a euro-denominated stablecoin. But I can anticipate one is coming, and that when it comes, I think it could be an interesting innovation that promotes interoperability and serves the Eurozone very well.
Yeah, I agree. It's a huge challenge in Europe due to these negative interest rates to come up with a business model that works in the end for a stable coin. Maybe building upon this statement, what's actually the business model of the USDC? I mean, of course, in the US, it's totally different. You have positive interest rates, so you can actually gain something or get a return on your reserve versus having to pay for your reserve. Is that kind of the major part of the business model, or how exactly is Circle as a company earning money with USDC?
Yeah, well, I could tell you, and I don't mean it as a joke, it's not a charitable activity, but it is one, while it's not a charitable activity, excuse me, it is worth highlighting that the broadest mission statement for Circle is a charitable mission statement, which is raising economic prosperity through the frictionless exchange of financial value. But to do that doesn't mean that you do it for free, because obviously there's an enormous amount of risk and expense and sort of bank-like management that underpins this business model. But the revenue model for a well-regulated stablecoin issuer is pretty obvious, right? Number one, the narrow spread between stablecoins in circulation and underlying reserve assets. Now, the world needs and wants those assets to be conservative. There are some classes of stablecoins out there that are putting whatever they can, the kitchen sink and Chinese real estate, in the reserve pool, and then making promises on Twitter that it's safe and it's stable. I'm willing to wager as a risk person that for 1,000 days before Thanksgiving, a turkey is also very happy, and then it's the Wednesday before Thanksgiving, and every turkey is dead. So there are a lot of things masquerading as stable instruments in the crypto economy that have just fundamental economic flaws baked into them. Many algorithmic stablecoins look like that, and frankly, many of the largest stablecoins have that property. In our case, cash and U.S. Treasuries, high quality liquid assets, belong in the reserves, but these are conservative, and the mandate is risk management and economic parity between the reserve and USDC in circulation. But that produces a narrow rate of return. That is one of the economic models. The other economic models are around what I call the verbs: send, spend, save, and secure. The 4 S's of payments. Each of them has a nominal property to it around economics, whether it's a small transaction fee and so on, that Circle lives on. But the long-range intuition here is that because now a stablecoin is an internet-native payment instrument, that it would also start to have the economic and disruptive properties of the internet, which is that to move money will eventually approximate free, depending on how you move it and on what chain. So in that world, network effects, scale effects, and this kind of interoperability becomes a very powerful long-range strategy. The other way the Circle operates is that our business plugs into traditional rails, right? So we plug into different money transfer rails, traditional ones, SEPA in Europe as an example, and so on. That kind of omni-chain interoperability is a very powerful positioning statement, but it's not easy. And it requires being well regulated, and it requires interoperability on and off chain. And that's why we think this is an industry in which no single company can do it on their own. You have to have openness as a part of your business model. So those are Circle's revenue drivers. And then, it's money, Moore's law, and network effects all colliding at once into this interesting new world that we're in.
Cool. So let's maybe dive a bit deeper into this reserve that Circle is managing, and that's used to back the USDC. I have seen that you are planning to apply for a US banking license. I'm not sure if you have done that already. My last information was you're close to applying.
Yeah. Well, so managing the reserves. At first, I would say, again, back to the way stablecoin regulation and policy is emerging in Europe and in the UK and other jurisdictions, is a lot of stablecoin issuers ignored e-money rules to their peril. Mm-hmm. And we did not. We are licensed in the United States akin to major payments companies, PayPal's, Apple Pay, et cetera. And we're licensed from coast to coast and sea to shining sea. And so in some respects, when people say stablecoins are an unregulated internet funny money, I say, well, look, go speak to the country's money transmission and state bank supervisors and ask them how they feel. However, because the innovation is big, and because the innovation ultimately is also cross-border, we think it's really important that the innovation enjoys national oversight. And in the United States, the federal regulators, such as the Treasury Department, the Fed, and the Office of the Comptroller of the Currency, have ultimate oversight over the banking system in the US. The other really critical piece of the puzzle is that US states do not sit at the table with the Bank for International Settlements, the Financial Stability Board, and the Financial Action Task Force. So that's the only area in which I think the US has a competitiveness gap. But otherwise, I think the US is winning the digital currency space race in no small measure because companies like Circle and others are building and designing inside that regulatory perimeter. So we are working towards becoming a US chartered bank. but we're still in this pre-licensing phase, in part because Congress and the Senate have been asked by the White House and what is known as the President's Working Group on Financial Markets have issued a report late last year asking for Senate and congressional action on meeting those recommendations.
And is one of the goals of becoming a bank to use this banking license to build basically a full reserve stablecoin, so meaning backing USDC 100% with central bank money at the Fed?
Well, so the short answer is we already have a full reserved dollar digital currency that is exceedingly well regulated. And so, and that's an important point that I think we need to make sure we make much more assertively, and take offense whenever someone says stablecoins are an unregulated wild, wild west. I would say not all stablecoins are created equal, but not all of them are an unregulated part of this internet hot money world. But we are already today a fully reserved dollar-backed stablecoin. What becoming a bank creates, ironically, is if regulators believe in this concept of same risk, same rules, technology neutral regulation, then we need a payment systems charter in the United States. In fact, back to my ambassador role for Switzerland, when I had to explain to the planet why on earth would Switzerland be the domicile for the Libra Association, later rebranded Diem, well, my answer was very simple. Switzerland has, under its existing banking and financial services rules, a payment systems charter that could decouple bank-like risks from infrastructure risks and create a supervisory structure that would be not only sufficient for what the project was, but in some respects standard setting. And so I took offense on behalf of Switzerland when people said, you went to a regulatory haven and it was regulatory arbitrage. To the contrary, Switzerland had a national whole of government license and still has for these types of innovations.
Yeah. So let me maybe clarify what I meant with full reserve, because you're of course completely right that the stablecoin is fully backed. I mean, you said with cash and also with treasuries, which is of course the safest asset you can find on earth, basically. My question was if Circle aims to become a full reserve bank, meaning that you are actually backing the stablecoin in the end, not with cash and treasuries, but 100% with central bank money that sits in an account at the Fed.
Well, and by the way, so I understood that for sure, and I got a little philosophical in defending Switzerland. No, I understood that, and that was my point about same risk, same rules. That what banks enjoy that payment systems companies do not is access to the Fed window, the risk-free rate, and if you want to compete on a level playing field in banking, payments, and money, then payment systems ought to have access to the risk-free rate, just like banks do. And so that would be an example of a level playing field that is tech neutral, activity-based, and provides for the same set of rules as the banks enjoy. And so that's where we think a federal banking charter for Circle is not about Circle needing the legitimization of banks nor the legitimization of Wall Street, because we already enjoy that. If the sheer number of licenses held is a proxy for being well regulated, then we're the most well regulated company on the planet. What we need is access to the level playing field that the banks enjoy, which is access to the risk-free rate.
So let's maybe, Dante, for the last couple of minutes, switch gears a bit. I want to talk about another topic with you, which goes into the direction of regulation, AML, and these kinds of things. And I would actually use the situation in Ukraine, the crisis in Ukraine, as a motivation for that discussion. Maybe starting with a question: which role do you think do cryptocurrencies in general and in USDC in particular play in that crisis, be it on the positive or the negative side?
Well, first of all, thank you for the question. And honestly, if there's any single thing that animates me personally more, and I think Circle's vision more, it is these extreme scenarios where all other rails fail, the banking system fails, and let's not forget the other major global lost crisis, which is Afghanistan, where the banking system and the formal economy have ostensibly fallen into the hands of people who would be otherwise on a sanctions list. How do you get good money to good actors in even complex places? What has transpired in Ukraine with the mobilization of all crypto assets to a Ukrainian government-backed digital wallet is, in my world, the exact architecture of a digital humanitarian blueprint, where a form of money that travels with you, a form of money that can survive absolute rampant bombardment of your country, and a form of money that can be mobilized at the speed and scale of the internet by an internet organized community of purpose, is a form of money that the West and well-regulated, rules-based, principles-aligned countries should enable, protect, and defend. And that's the highest order use of everything that we do. Circle in Venezuela, for example, a number of years ago, at the height of the crisis in Venezuela, hyperinflationary domestic currency, a government that's potentially hostile to the US government, Circle established a USDC money corridor into Venezuela to help more than 60,000 doctors in the country in response to the pandemic and in response to a range of public health emergencies. I will not rest, and Circle will not rest, until that kind of blueprint becomes the norm and a part of the humanitarian intervention blueprint rather than an exception. These are not pilot projects. These are real, at-scale deployments of money on the internet. So very, very powerful use cases here.
And which role in general does Circle play for USDC and the adherence to, let's say, AML regulation? Is it that Circle as the issuer is actually not that engaged in making sure AML rules are followed, because that's something that the virtual asset service providers and the users have to do? Or does also Circle play a role in making sure that kind of AML, CFT regulation and that the travel rule and all these kinds of things are followed?
Yeah, well, for one, we've always maintained broadly that innovation, inclusion, and financial integrity are not trade-offs, and that you cannot have one and expect it to get very big and not care about financial crime compliance, sanctions, and so on. So very broadly, Circle not only conforms with these rules, we think in many respects we're helping build exponential improvements in how they're applied and in their efficacy. For blockchain financial infrastructure to really work at population scale and to continue growing, you cannot expect bad actors to have a long place to hide forever. And that's not only one of the superpowers of these public ledgers, which is that you and I and every amateur financial integrity specialist on the planet, armed with an internet connection, can be a part of that collective witness to make sure illicit money flows are tracked, traced, and increasingly retrieved. So Circle, of course, works in that spirit. We also believe in this notion of the rule of law. There's a big debate today amongst stablecoin issuers and algorithmic stablecoins and others about, Circle is an extension of the US government and they're just going to sanction people unilaterally. The reason the dollar is the global currency of reference is because the dollar is the sum of all the parts. It's the sum of our institutions. It's the sum of that gap between public overreach and private protections and the rule of law. Circle is the same. And so, the ultimate accountability for digital asset risks lives between the digital wallet holder and their keyboard or their screen. This is device-centric finance. And if the holder of the device is a bad actor, then laws should apply that stop illicit activity. If the holder of device is a good actor, to the right of lawful, the use of money should be as free as possible and to protect good users in the system. And that requires accountability in the entire value chain, from the wallet to the virtual asset service provider to the exchange to the stablecoin issuer. And Circle's working very hard to make sure that value chain stays intact and that we don't shut down the internet of value because we're afraid one bad person makes one bad payment. By today's standards, entire continents are cut off from the formal economy.
So Dante, I have saved the hardest questions for the last one. It's a bit of a geopolitical macro kind of questions tied to the situation that we are facing right now in Ukraine, etc. What are your predictions for the future of our global monetary system? Will it kind of after the war be back to normal with the US dollar being the global reserve currency? Or could you also imagine other possible setups where maybe the US dollar loses at least some of its power as a global reserve currency? And in particular, kind of what is the role of USDC going forward in our global monetary system?
Yeah, well, as it happens in your neighboring country in Liechtenstein,
Yeah.
My good friend Prince Michael von Liechtenstein has posed this same question to me, which is, number one, the geopolitics and the geoeconomics of this digital currency space race are the thing to watch. At the Winter Olympics in Beijing this year, China unveiled at population scale the ECNY project. And by any measure, the lowest number is 200 million users. The upper bound could be as much as 600 million users. And in the long range, part of why many governments are thinking about alternative payment systems at the government level or central bank digital currencies is to have a form of value transfer that is not conversant with sanctions and that is not going to be weaponized in the extreme as we're seeing today with Russia. The only alternative of protecting and preserving a rules-based global economy that is not going to penalize good actors for fear of bad actors dominating the system is that these innovations, like exactly we did in the past with SWIFT or any other money innovation, conform with principles, values, and regulations, and that enable people to participate in this emerging economy. But the geopolitics and the geoeconomics are real, and I don't think of any crypto assets innovation that is responsible as substitutional to those rules, but rather as additive to them and answerable to them. And so I think this is a space to watch. But you know, Prince Michael and Liechtenstein has posed the same question, and I do think the answer will not come from one company, but will come from coalitions and ecosystems and the public sector also enabling these innovations to live in their jurisdiction.
Dante, it was a great pleasure to have you on the podcast today. Maybe a last question: how can people find you? What's the easiest way to stay up to date on your projects and on Circle in particular?
Yeah, well, first of all, Alex, thank you for the wonderful conversation. Hopefully we've unpacked a lot, and maybe in the future there'll be a follow-on to see how our predictions worked out. You know, Circle at circle.com is the best place to know what Circle is up to. And then me, I'm on Twitter, and I have a personal page with all of my writing and sort of thinking and upcoming speaking engagements that people can follow along with. But really great sharing the stage with you today, Alex.
Yeah, thanks a lot. I agree. I think we have covered a lot of ground. So thank you for spending some time with us today and sharing your insights.
Thank you.